Hello everyone, as the financial year ends and we move towards the months of June and July, we come across the annual mandatory ritual of filing our income tax returns. We all understand and realize the importance and need of filing the tax returns, but today CFP Rajit Kothari will discuss 5 essential advices that will meaningfully impact your process of filing income tax returns for the past financial year. Advice number 1, file your income tax return within the stipulated due date of filing. For individuals and HUFs who are not covered under the tax audit, the due date of filing of return is 31st of July, while for individuals and business entities who are covered under the audit, it is 31st of October. It is utmost important to file your return within these due dates in order to avoid unwanted penalty consequences and to carry forward certain types of losses for set off against incomes in future financial years. Advice number 2, match your income data with the data available on the income tax portal. The income tax portal has a lot of details about your financial transactions in form of incomes, assets and other transactions through Form 26AS, the Annual Information Statement Form and the Taxpayer Information Statement Form. Your income should ideally match the details available in this portal in order to avoid any kind of queries through the discrepancy in future. In case if the details available in this portal is incorrect, then there is a mechanism to resolve that and to match your income data exactly with the data available on the portal. Compare between the old and the new tax regime. As we are aware that there are 2 mechanisms of computing our tax liabilities on our incomes, which is the old regime and the new regime, we must compare both through several online tools or softwares that are available and take the one that is beneficial to us. It might happen that if the return of income is not filed within the stipulated due date, the taxpayer may have to mandatorily go with the new regime of filing tax return, which is because it is the default regime of filing returns. However, it is important to go that extra mile and select the one that is most advantageous. Advice number 4, deductions should be corroborated by authentic documentary evidences. We come across several taxpayers who tend to claim fake donations or fake deductions such as house rent allowance, certain donations, investment deductions. However, these kinds of deductions are very much prone to assessments, and during a tax assessment, it is mandatory to produce these kinds of documentary evidences as supportive documents. Hence, one must have authentic documentation and genuineness in order to claim these kinds of deductions and exemptions. Advice number 5, disclose all necessary information that is required in the income tax return. Over and above the income details, there is a lot of other information that is mandatorily required to be disclosed in the income tax return, such as foreign assets that are held, investments in unlisted shares, directorships or partnerships that are held by the individual, and details of all bank accounts. Many people tend to avoid disclosure of this information, but this can have long-standing implications. Hence, it is necessary to disclose all these information in an appropriate manner. The income tax return is the ultimate proof of the financial standing of any individual. Therefore, it has to be considered very minutely and double check your return before filing it. Do take professional help if required and follow us for insightful content in the world of finance and taxation.